Like I say, this webinar is going to be recorded, so welcome to everyone that is here. I appreciate your time. Okay, so let me just read out a couple of the topics that have been requested. So we've got, can I cover pound yen? Can I cover dollar yen? Yes, I can. I can cover currency pairs for the week ahead if you want me to. Support resistance, yep, can cover that. It's pretty much a bit of zone work, and so there's no problem with that. I can cover that. Starting in this case, best way. Risk management and trading plan, yep, can cover that, no problem. Identifying trend continuation, yeah, good. That's a good topic. I can do that. Okay, right. What I'm going to do now is I'm going to hand you over to, like I said, the guest speaker is just going to say a few words, just a bit of an introduction, really, because I know that a lot of people know him. Very popular guy, very great trader. And I'd like to think he's a good friend of mine now, and he's taught me plenty of stuff over the time that I've been in his groups, etc. So I'm going to hand you over to him now, if I can find that. So, like I said, you guys are probably already going to know him, but so please just give him a bit of your time. So this is Uncle Ted speaking. Uncle Ted on Instagram. I'm sure you know who he is, but so fire away, Ted. You're now unmuted.
Hey, thanks, Alex. I think it's a great thing that you do. Once again, I've known Alex now for a few months, and I think in terms of his knowledge base, it's incredible to see the progress that he's done. Having already had, I think, experience trading, this is something that I think a lot of traders need to take into consideration, and I think Alex did a great job. Was you're never too good at what you do to learn a little bit more. And I think Alex exemplifies this because he was already trading. When he messaged me, funny enough, he was talking to me, and he was already doing, a bit of mentorship and, trying to get his feet off the ground with trying to help people. And it was interesting because, I asked him, I said, what were your plans and what did you really want to do? And I was able to talk to him, and and I said to him, and I said this to everybody, is, if you're providing a great value or a great service, I want to help you, and I want to be able to get you to the level where you're comfortable. And, Alex was very, very intent on doing that. And you can see the dedication and the work that he puts in. He had a free Telegram group for the longest time. He has a WhatsApp group. He has a lot of different things. He's always doing Instagram lives, which I believe, every week more and more people are tuning in. Great contributor to my groups, takes it upon himself. And this is something that, we like in the community, especially, with himself and others, mentors working just with, myself, the Forex family. I don't want to talk about us, but I want to talk about Alex, is he dedicates his time to everyone to reach out to him. And that's really what you should be looking at with a mentor, is somebody, who's always improving and always looking to help the next person. And it's great. Alex messaged me yesterday and he said, I'm going to do this, and I'm going to have a, webinar. I want you to come in and speak a bit. And there's no problem at all for me to come here and speak about Alex, just because of the work that he puts in and his commitment to the craft. And like I said, we all as traders have to understand that we don't know everything. And I think a lot of people make the mistake, and you'll see that on Instagram, is people are trying to say that they're the best or they know everything more than everybody else. And that's not fair. Even I'm still learning, and I have a lot of people follow me, and a lot of people ask me questions, but those questions spur innovation and they spur ideas. So, someone who says that they know everything, you're limiting yourself to understanding other ideas or other approaches. And Alex, is a perfect example, who was already trading, joined my group, helped the group get to a next level because there was a lot of new traders in there, but also helped himself. And now, he's able to, help others, mentor others, but he's got a really solid foundation for what he does. And it's great to see that kind of approach. And I encourage everybody, and I believe, Alex would say the same thing. I don't want to speak on his behalf, but I know the kind of person he is, if there's people that want to build and want to mentor and want to educate others as they get better with the craft, there are traders out there like myself, Alex, everyone else, that will help you get to that point, because there's no competition. We're never in competition with each other to say, hey, I need to have these people in my group, or, these people need to sign up with me or come with me. You're free to go wherever you want, because as long as you're getting quality education, other traders will recognize the value that that mentor is putting in and will be gracious enough to help all the time. And that's a key determining factor when you're talking to somebody who has the level of education that Alex has, and the continuous improvement approach that he does have with everybody. And, you find that, he's networking really well within the community. I mean, you said, I'm probably pretty well known, and that's fine. But, at the same time, I don't mind helping people that are actually showing an honest attempt to better themselves, but also give other people the opportunity to better themselves as well. So I think you guys will enjoy the next hour and a half, 2 hours of Alex's discussions and, his ideas. And like I said, take a lot of it back with you, write a lot of notes, and question things, because you know what, at the end of the day, you're only going to get what you put in, or you get what you put out, or, when you put it in and you put the effort in. And that's the key here is, take notes, evaluate what you're learning, try and ask questions about it, but really dive into each topic and really get a good understanding of it. So I hope that's good, Alex.
Yeah, absolutely. Thank you very much for that, Ted. So as Ted says, this webinar is literally to help people level up and do, exactly what we're here to do, in terms of we are all here to get better at trading. So myself, bit of background on myself. So I've been trading about 2.5 years now, consistently for probably a year and a bit. The whole point of this webinar, and the whole point of my mentorship groups, the whole point of the Forex family, the whole point of every mentorship sort of program out there is to help people get towards their goals. So I don't know what people's goals are in here. And to be honest, some people may have massive monetary goals. Some people may have sort of time freedom goals. It doesn't matter what your goal is. Forex is a different thing to every single person in here, I would assume. A lot of people come into Forex because of the money, and I understand that completely. But so as Ted says, just sit back for the next hour and a half, 2 hours. We'll go through plenty of topics. This is all getting recorded, so don't worry about that. And I will put this out on the YouTube channel that I've just made, just so that there is free content and there's free education for people. We do say this a lot, especially a lot of the people in the Forex family and the people that host their private mentorship outside the Forex family. Obviously, Ted is a founder. Then you have people like Forex Six God. You have Javier. You have Rag. You have Raquel. You have Sammy. Tons and tons and tons of people that host their private mentorship. And like Ted said, there is no competition in that, and everyone sort of delivers their value, but they're also not in competition with people to not help each other out. So for example, I'll help out in their group, as Ted says, I'll help in his group, he'll help in my group, and it is a big continuous improvement program for everybody. And Forex doesn't need to be a competition. You don't need to compare yourself to somebody else. Compare your account to my account. You don't need to compare your lot sizes to my lot sizes. And that is a common question I get asked, actually. Why do you blank your lot sizes out? There's 2 reasons. The second reason I won't go into, but the first reason is I don't want that to sway people into a false sense of their trading. So if you're a new trader and you're just starting out and you're 2 months into your trading, there's no way you're going to have the level of, you're not going to have had any time in the trenches. And I talk about this a hell of a lot. You need to realize that as a trader, you almost have to do those time in the trenches and the stuff that you don't want to do. And you have to go through the ups and downs and the roller coaster of things. You might make quite a bit of money. You might lose money, but there's no way that you can just come into it and master it within the first 2 months. So, the fact that I blank lot size is to make sure that people aren't swayed into going too big too soon, if that makes sense. So, for example, if a newbie trader came in and they're trading the same lot size as me, or trading the same as Ted, trading the same as any sort of established trader, for example, on Instagram, you'll see that most people don't need to give people an idea of their lot size, because the chance of a newbie trader trading the same amount with the same capital, etc., is not high. So there's no point to. A lot of people say it's motivating, but personally, as a trader, and even if I was in other people's shoes as a new trader, I would think, okay, well, being a realist, because I'm very realistic. So when I came into Forex, I actually looked and said, okay, well, that looks like bullshit. That looks like bullshit. Okay, well, that guy over there's 17 or he's 18 and he's trading £500,000 account. I used to think, okay, well, that's bullshit. That's probably not realistic. And because I was so realistic in my actual approach when I started trading, I didn't get sort of swayed by the hype. And I talk about Forex hype so much is the fact that you get led down a path almost, and you get led down the narrative of, well, it's all about cash, it's all about cars, it's all about watches, it's all about the designer stuff, the finer things in life. And I get the questions a lot. I say, well, people ask me, why don't you wear these clothes? Why don't you have this car? Why don't you have this watch? And I'd say the same thing to people every week. And on every time I post Instagram live, I say, we won't talk about any kind of cars, watches, etc., because you see what car I drive. I'm going to have the same car for the next 2 years, regardless of how much money I actually make. I save all my money anyway, so I'm not interested in another car. The car I've got now will not change for 2 or 3 years. The watch I have now will not change. It was a birthday present for my 21st birthday. There's no way I'm going to get rid of that, even no matter how much you make. And I think that's important to realize that actually your value of money will probably change in Forex. And what you think now as a beginner, perhaps, believe me, your value of the money will change. I wouldn't say mine did, because actually I had a very good value of money anyway. So I didn't think about things in terms of, okay, well, if I make this trading, then I'll do this with the money, or I'll do this with the money. I'll go on holiday here. I'll buy this watch. I'll buy these trainers. And I mean, that's one thing I'd just say. Try and steer clear of the Forex hype. We'll talk about that towards the end of the webinar, definitely. Right, we'll have to disable the annotations. That's a bit annoying. People were back in business. Right, sorry about that. Sorry about the delay. I know I've taken up some of your time there. I'll extend the time as well. It's one of them things, because I'm pretty new with it. My bad. So don't worry about it. I know it happened to Wix Don't Lie as well. So here we go. Sorry. Oh, Jesus. Sorry about that. Right. So let's just get shit popping. Like I say, people like that, it's one of those things that don't want you to provide free stuff for people. Literally, when we talked about competition like 5 minutes ago, you can see now what we're talking about. You can see that there's obvious. It's almost like a disregard, and it's like a disrespect for people that throw out quality information against the people that are obviously trying to sign you up for certain programs, etc. But I'm not going to get into that kind of shit, because I'm not that petty, like obviously people that jump on people's webinars and scribble all over them. So let's talk zones. It's the most popular topic by absolute far, because a lot of people ask me how I obviously execute the trades that I execute, etc. And so I'm going to just make notes as well, just as a talk, so it's easy for people. So how do I trade? So, okay, first things first. 3 time frames. Right. Okay, 3 time frames. The reason I use 3 time frames is I use 1 time frame to establish the bias, work out the overall trend, and a longer kind of time frame, so higher time frame, and work out the actual trend. And then I go down 1 time frame, and then it's a couple of time frames, because I go from I use 1 hour. Right, style. So I use 1 hour, 15 min, and 5 minutes. Okay. So I use 1 hour, 15 minutes, and 5 minutes. And obviously this is going to just link in. This is trying to kill a couple of topics in one. So how I trade and also zones in one. So first things first, if we talk about zones, I draw my zones on 1 hour and 4 hour. So zone work, 1 hour and 4 hour. And everybody asks me all the time, it looks so simple, you know, why don't you just do that every single day? And I say, I do the same thing every day. I do trade zone work pretty much every day, all day. Sometimes I do a bit of scalping, but majority of times I'll try hold positions a lot because price zones respect each other so much. So let's just dive into stuff. So what is a zone? A zone, in my eyes, and obviously in my opinion, is where price obviously struggles to pass above or below. It's very similar in my eyes to support and resistance. I know people have different opinions about it, but that's how I see it and how I use it in a profitable sense as well. It's very, very consistent. So let's just look at it now. We're looking at the USD JPY, or the dollar against the Japanese yen, and that's only because that's my favorite currency pair. If you understand price action, you can trade any pair though. So keep in mind that if the dollar yen isn't your pair, don't worry about it. All these skills will be transferable, so you don't have to worry in terms of if you don't understand it. Still drawing on. Okay. A bit. Okay. One moment. I got a message off a couple of you saying they're drawing on yours as well. That's not obviously ideal. Okay, there's a lot of Teds in here. Okay, right. Let me just pause the recording again. Okay, guys. Okay, get to it. If you've got the toolbar, you should be able to undo. So if you click on annotate and you click on clear, and then there should be an option to clear others drawing. Okay, so if you need me to keep clearing people's drawings, just let me know, and I don't mind doing that. But so hopefully, it's put in the chat. If someone starts messing around, just put in the chat. I don't mind. Well, the thing is, it's one of them things. You know, we might have to do it another time, but I don't care. I'll put out as much content as possible anyway. But so yeah, when I'm talking zones, when you cleared yours, mine cleared as well. Yeah, that should work. I've disabled annotations as well. Okay, where was I? I was zones. So we're talking zones. So for me, I use a rectangle tool. And how do I draw price zones? Why do I draw them? Like I've said, I draw price zones because that helps me establish what's happening in the market. So, for example, I've talked about it being kind of support and resistance, and in my eyes, that's what it is. And as a lot of traders will say, myself, Ted, Rakil, who is obviously at Wicks Don't Lie. If you don't know about him, go and check out his page. Absolute boss of a trader, and pretty much all he does, and pretty much all I do, is just looking at support resistance, just using really basic stuff to take our trades. Just because, like I talked about hype earlier, the hype is massive in Forex. If you think about it, the sort of perception of Forex is that it has to be guys in suits on Canary Wharf or on Wall Street, and you have to be this big shot to be a trader, and you need to do certain things. It needs to be really complex, is what I'm trying to say. It has to be like complicated. So, the small guy down the road, he can't do that because, Forex is for the guys in the suits and the guys, that have worked in finance and deserve to trade Forex and blah, blah, blah. Going off on a tangent, but what I'm saying is to keep things simple. So support and resistance, keep things as simple as possible. So, like I said, how do I draw zones? I draw them on 1 hour and 4 hour. Like I've said, I work on 1 hour time frame, 15-minute time frame, then 5 minute. 5 minute is usually for my execution to eliminate drawdown. That's why I use 3 time frames, so you eliminate drawdown. So, for example, now, what do I look for in terms of my drawing zones? So let me just quickly write this down as well, so just in case you want to take notes. Zones, using Wix as my guide. So for those that don't know and don't understand candles, that's absolutely fine. That's the reason you're obviously on this webinar. We'll cover candles perhaps briefly. I'll cover it right now and tell you exactly what it is, and then we'll move on to why we use the wicks of the candles as the guideline. So the candles are made up of two things. They're made up of the body, which is the thick part of the candle, and then they're made up of the wick. Sometimes there's no wick and all body. Sometimes it's just wick. There's so many candle patterns. That's a story for another day. If you need candle work, go on Google or Baby Pips, and you'll be able to find stuff about Japanese candlesticks. But so the wicks of the candle is the interest to me when I'm drawing zones. Candle wicks are essentially points of either price exhaustion, price rejection, and like the retracement. So for example, if you look at this candle here, this is a massive wick, and then it's pretty much shot up in price. This was a trade I talked about in my group actually on Friday, because this was Friday's markets. As you can see, we've only gone a couple of days back. And so what is a wick? So the wick is essentially a price tap, where you've come to a certain point in price, and it's rejected very harshly. That's why the wick is quite significant. It's quite large, especially on this candle here. It's essentially like a liquidity push. So you're pushing down to a certain price. So for example, we know that the banks and the institutions and the people that are pushing price, it's not us. We're not the little ants, the little retail traders. It's not us that's doing the legwork. It's the big powers, the higher powers that are moving the markets for us. We know that, and it's absolutely fine. And as soon as that clicks in your brain, you'll understand your little tiny, $1,000 position, £5,000 position, whatever position your size is you're working with. It's not going to move the market. You're not going to push the price on your own. It's going to be banks. It's going to be a lot of people, a lot of volume of orders to push price. So how do I draw zones is essentially the next kind of question. So I've said we use the wick as a guideline, just as a recap. We use wicks as our guideline because wicks are price taps. So you're tapping certain prices and then pushing away from them harshly, leaving the wick either above or below the candle. We know that. So I'm always eyeballing. As soon as I open my charts in the morning, whether I open them on my phone while I'm on the toilet, I might open them on MetaTrader app on my iPhone and say, okay, where is the price going to go? So instantly I open a 1 hour chart and I say, okay, let me draw some zones. Let me look for some wicks that stand out to me where there's obviously clear support, clear resistance. You can see my chart is blank. My chart has got 3 things on it. It's got 3 essentially like squiggly lines. These are moving averages. I use them as confluence. Don't trade solely off them because I don't believe you can solely trade off indicators. I know people that do and they're profitable and great for them. But for me, I like to have a lot of confluence. So that's why my chart's so blank basically. So let's have a look over here. We can see pretty much, don't know why they're orange, but you can see why have I selected this point here as a price zone, and the reason is quite simple. You can see essentially 3 taps in price where there's, and this is on the 1 hour time frame. Remember, higher time frame prevails. It kicks ass basically. If you're not using high time frame, you should be. That's all I can say to you, because markets are trending. We want to trade trending markets. You don't want to trade against a trend because counter trend trading is quite difficult, and I find it difficult myself. I know people that solely counter trend trade, and EMA magnets, stuff like that. Personally, for me, that's I find that difficult. Entries, etc., and probability is not as high because I like to trade high probability kind of trades. So we're talking high probability. We're talking about following trends. The markets trend 30% of the time anyway. So the fact is, if you're not getting involved in that 30%, because the other 70% is consolidation, I think it's foolish personally. So let me just jump in the chat box a second. Okay, so what can we see now? So this is essentially like a zone of resistance. Let me just type that up here. It's like a zone of resistance. We'll just shorten that to res. So what exactly do I know about that? we know that I think it's a stat. I think it's Raquel told me that's about an 80% chance that we're going to reject and price is going to bounce off support and resistance. So, one moment. You can't hear me. One moment. Okay, is audio working now? Can you let me know if the audio is working now? Okay, right, wicked. Perfect. Well, what was I saying? Yeah, also, this is going to get uploaded for TED, but I don't understand what's going on because there's about 10 TEDs in the webinar, so just don't know who I'm replying to, but the real Uncle Ted, the real Slim Shady, yes, it will go in your drive, of course it will. Right. So also, that's a good question, actually. So why did you draw the box above the zone? And for me, that's just to give it a little bit of leeway because price might not stop exactly here, but price may reject a tiny bit more. And you don't want to essentially just write that off and say, okay, well, if price comes up to this point and we're going to take entry straight away, I personally wouldn't. I'd say wait for some kind of, it's rejection and exhaustion at the same time. So we've drawn that resistance box above there. Now, I would say, let's look for support. So you've got, this point here stands out to me. You've had a pretty strong push down. You've got, 3 bullish candles, which looks like, looking at the timing, so that's like Asian Open, isn't it? So looking at the timing, you can see that that's pretty much Asian Open. And so you've had a really strong push down, and then you've got pretty much a massive rejection here. This is a 1 hour, and then you can see the next hour. So the candles are essentially making, highs now, and you could probably draw a trend line here and say, looking there, no real surprise. It's obviously pushed up the way it has. So yeah, that again is another key area of interest. So I'll just highlight that. So I'm using a Wix as my guideline again and say, okay, well, that's some kind of support. So that's support. One moment. Oh, right. Okay. I understand why there's so many Uncle Ted to go about it. Okay. Now I understand. Okay. So you can see, essentially, I've just used the wick as a guideline again. And for me, it looks like a strong tap and it's some kind of support. So there's 2 boxes. Now, the interesting thing about using zones and wicks as your guidelines is that if we look here and we look at that point, for example, it's like a strong kind of rejection, isn't it? We've pushed up there a couple of times, pushed up into this kind of point. If you go into the smaller time frame, so let me make a note. So if you tap a zone of price, resistance or support, I would go down to 15, 5 minute, what the candles look like. So this is quite key, actually. If you take a look at up here, for example, you see that the candle is essentially pushed up into the zone and pretty much pushed. It's tried to like retest the zone when the next hour starts at 8 a.m. We know the market's going to push because it's London Open. And you essentially see a push up into that zone again and rejection from that zone. So you've had 1, 2, almost 3 taps and prices pushing back down. So initially, what I would say is that when you reject one zone, you may go to the next, or when you break a zone, you may go to the next. And this is important to remember. But I'll explain that once I've marked up a couple more sort of levels of price. So, like I've said, just use your eyes and look what stands out to you. Tell me what stands out to you. So for me, if I make that a little bit smaller, what kind of prices look am I looking for, and what stands out to me? I'd say this point here, and it's always about looking left. You'll hear Ted speak about looking left a lot, and you have to look left, because price often repeats itself. So prior price action and price movements often get repeated. It's so simple. If you can realize that, and you can realize past come back, past always repeats itself. A lot of people say that. It's pretty true, especially in my eyes. I would definitely agree with that. So like I say, we're looking at the past, we're looking to the left. So where could we go here? So I can see at like 3 taps at this point here as well. So you've got 1, 2, 3, and shock horror. This candle here, again, pretty much dips into this like kind of zone of liquidity and then pushes straight back up. That candle was news. That's a news candle. It's too big to be anything else. It's like what 140. What's that? 140 standards. It's a big candle. It's a big ass candle. Yeah, FOMC news. Yep, thought so. I thought it was. And so a lot of people ask me how I trade news. I can talk about that in a little while. But so the main thing that I'm going to say to you about zones and how to draw your zones, I've told you how to draw them. So like I've said, zone 101. Use Wicks as guide. Look for multiple taps. When you see taps, drop time frame. Look for exhaustion. Okay, Wicks. So you might look at, for example, over here, a couple of taps in a resistance. You think that it's going to reject. So what kind of signs are going to tell you it's going to reject? So if I jump down to a 15-minute time frame, zoom out. Okay, zoom back in. You can see here, I've marked up the resistance. Shock horror, you've got what? Tap here. So you've got your initial tap there, which would make it a point. You've got you could almost say you found like a support there, but it's like the middle of the morning, so there's not a lot of volume anyway. So also remember, this looks like it's like a kind of support point in an uptrend, so the likelihood is you're going to buy at support anyway. But so like I say, drop time frame. So on the 1 hour, you could have seen, okay, well, we've got a couple of taps. We've also, zooming in, you've got the doji, which represents indecision. You've got wicks above here, and then you've got wicks above here. And so this is the 15-minute time frame. So for me, this is a trade I actually executed as well on Friday, and I did a daily trade log of it. As I do with any trade that I take, I'll always document it down. Journaling is not to be missed, because it will make you a better trader in the long run. You can see that on the 15-minute time frame, we've had a couple of rejections, and sort of shock horror, it's absolutely fell away from that. And you can almost sort of see why the price has come down to here, because if you look left, you realize the price might struggle there, price might struggle there, price might struggle there, price might struggle there. So I'm pretty sure I had a little box drawn there, and pretty much shock horror. You can see, because we're on a small time frame, it's probably not the best image, but you can see that the price has pretty much come down, actually broken through that tap this point here, and then it's rejected off there. So again, you can see pretty much zone to zone work. And if you look on a 4-hour time frame or the 1-hour time frame, you'll see that it's not that uncommon to go from zone to zone pretty quick. I don't know why I was zooming in so much, but that actually might be better. Move this text over here so it stays on the screen. So like I've said, that is zone 101. Use Wicks as your guidelines. Look for multiple taps. Use a 1-hour time frame to start with. Then once you've seen multiple taps, drop into a smaller time frame. Look for exhaustion in Wicks. Look on the 5-minute. Look on the 15-minute. See what the candles look like. You see big wicks. likely to be some kind of rejection. Exhaust. Okay, right. Let me just jump in the chat box a second. FOMC candle, yep. Interest rates, yep. I can see that. Okay, so like I've said, that's zone 101 in my eyes. And you might think I've told you something you completely already know, but trust me when I say to you, this is how I trade. It's not difficult. The way I trade is not some kind of magical spell. It doesn't have to be either. I really don't have to say, it's a triple donkey tail reversal or all the harmonics and stuff. I don't personally buy into that. If you do and it's profitable for you, fantastic. I'm not going to slate how you trade. Everyone, every man for themselves. Like I keep saying, I do not care how you trade. If it's profitable for you and it works for you, great. That's obviously your edge. My edge is zones. I understand that when price is moving how it's been moving the last 3-4 weeks, it's been unbelievable. This is a prime example of zones, this little point here. So you draw a zone based on that, really. You'd say, okay, well, I always extend my zones as well. So you can see over here how I've extended it to the right-hand side, you can see that why I'm extending it to the right-hand side. So type that as we go along. Extend your zones. Thank me later. If you extend your zones out, the likelihood of it revisiting a zone, where the price is probably going to struggle to break above or struggle to break below. Prime example here. You look at this point here. You draw sort of 2 points of rejection almost and like a support. So what do you think? Okay, well, if I extend it to my right hand side like I did here, and I did that without even thinking, which is normal. You end up doing things without thinking what you've been trading so long, and you've been trading the same setups. It's like clockwork. If you look at some of my documents, they'll be the same. The date will just be different. A student actually said that to me once. He said, your daily trading log, once you, I looked at those and they all look the same currency pair, same kind of times. I said, yeah, it is. It's just the day is different because it's a different day in the market, and it doesn't need to be harder than that, honestly. So if you look at this example, I extend it out to the right. Shock, price comes all the way down, taps this slightly. I said, 80% chance of rejection. Rejects so hard, straight back up to the next zone. How do we know the price is going up here? Sorry about that. How do we know price is going up here? Well, we look to our left, like we said. Bingo. We've got two weeks of rejection, so that's essentially your point of resistance. So if I type up there, so there's a point of res. So I know chances are, so chances are we've bounced off this support. Okay, well, the market is bullish anyway, so you can, let me draw arrow. So you can see bullish market, we've moved up because obviously this is the hourly chart, so we know the trend is strong as well. So no shock, you buy at support in a bullish market and the price is going to go up. That's not gospel, but it's just so frequent, and I see it so frequently that I know the chances are, my stop loss there would just, that reminds me of something else. So where is my stop when I trade zones? Below or above by a few pips. If you get a good entry as well when you're trading these kind of setups, your stop loss doesn't have to be huge. So, for example, if you got a decent entry there, your stop's up there, that's like 6 pips, 7 pips, But from here up to here, because you'd forecast we've bounced off support, so likelihood is we're going to go to the next zone to zone, Z to Z. So you said you have a range, and Ted talks about a range. If anyone's in Forex family, go and check out the document about a range that he's made. Things shit hot. So if you look here, you can see, okay, well, price is probably going to go up here. Logic tells us we're in an uptrend. Where's price going to go? Probably up here. So you look from here up to here. It's a 60 pip move that you're potentially forecasting. You're forecasting 60 pips. I can't hear anything. If people are having problems with the audio, try your audio. Maybe log off the meeting and log back in. If there's any problems and you can't hear me, just make sure you keep saying it in the chat box. It should be absolutely fine though. I've tested it a couple of times. And so, like, what was I saying? So 60 pips, you've got a 60 pip range of where price could go from down here up to here. Obviously, you don't know that at the time, and you think, okay, well, where is price going to go? Logic tells you you're in an uptrend. So what's probably going to happen? Probably going to keep moving up, unless some crazy catalyst. And you have to try and call the top of the market or the bottom of the market. Just go with the trend. So bullish trend, find support, potentially take buys, and you've got a 60 pip range. If I only want 10 pips, then what does that tell me? I've got 6 chances to get 10 pips. So for example, if I got the perfect wick entry down here where we've literally tapped the zone, because I could see it coming towards the zone and potentially taps and potentially rejects off the support, because it's like the second tap, so the likelihood of it actually breaking support isn't very high anyway. So if I had the perfect entry, say down here, and I had a 5-10 pip stop, 5-10 pip stop for like a 60 pip take profit is, you're talking 1 to 6, 1 to 12 risk reward. I only ever go for like 1 to 2, 1 to 3. Our stat positions usually I keep 1, or I usually stack and make 3 positions, close 2, keep 1 open. So for example, you could keep 1 open from the bottom straight up to the top. Pretty much minimize or eliminate risk, move your stops to break even or just above break even to cover the spread or commission, depends what your broker is. And so that's, in a nutshell, that is zones. Let me just go through the questions because I know there's been a lot in the chat box. Okay. Right. Why did you draw the box beyond the zone? I mean, the wicks. Yeah, I said I draw the box beyond the zone just to give a bit of breathing room because it might not reject the same exact price. Why don't you take into consideration the shoulders on Head and Shoulders as resistance? Seemingly wicks would be great. Head and Shoulders, yeah, I suppose. I mean, I could look for that. Personally, I don't really go into all those kind of patterns. I like to keep it really simple. Is the most basic answer I can give you for that. Can you confirm, is the London close 4:30 p.m.? It's 4 o'clock. I believe it's 4 p.m. When does it change? The clocks go back in autumn, don't they? And we're in autumn now. I couldn't tell you the exact date, but we're going to change from GMT +1 to GMT again, aren't we? That's if you're based in the UK anyway. Where do you see the market going presently? What day are we on now? So non-farm payrolls not next week, but the week after, if I've got my dates right. And so non-farm payroll, usually the week before. Usually, I think it personally, non-farm payroll sets up like a week before, because I think it's structured into the market, and I've got documents to prove the theory. So where do I see the market actually going? If you look on the 1 hour time frame, it's still very firmly bullish. So if I go like that, or I zoom out a little bit, you can see the market's so bullish. I'd say perhaps a bit of continuation. Looking at the way the EMAs are, etc., you've almost got like a little box. If I draw a box here, from wick high to wick low, that's how I draw my consolidation boxes. Sorry, it's in the same color. Let me just change the color. Border red, make it blue. So you've almost got like the hours consolidating, and we know consolidation means breakouts. So breakouts, we'll just cover this because I've got asked about it before. So how do I trade breakouts? Generally, I don't trade against the trend either with breakouts. So if the market's going to break out, you want it to break out above the box, probably retest this resistance. If it breaks out below, could come down to support. So for the next couple of days, I'd probably watch to see what happens, maybe draw on your hour time frame to work out where price is really going to go. A lot of people said that they thought price would go up to 114 again, which, to be fair, seeing that FOMC candle and how the news has reacted this week, I actually thought it might. I don't know 100% though. I can't say 100%. Questions. When we determine the trend with high highs and lows, for example, we only play zones only in the direction of the trend. I personally do. I'm a trend following trader. So generally, yeah, you'll put your zones in the trend. Buy support zones, uptrend, sell resistance zones, downtrend, low lows, low highs. Yep, that's right. How do you know where the market will go? Okay, this is a really good question. How do you know where to take profit trading zones? Right. For example, let's use this where my cursor is now. We'll use this example. How do you know where to take profit when you're trading zones? So, where's the text? Take profits when trading zones. Okay. So if you look here, I'm going to draw you an arrow. You can see here the price is rejected. Do you want your take profit to be to the pip of a zone? No, you definitely do not. You want to have the option to maybe close a little bit before the zone, just because, like I said, if it's going to bounce back off the zone and really respect it as a resistance or a support, you want your trade to be closing. So, for example, here you see it's come straight up there and come straight up to the resistance and shoots all the way back down. Literally one wick. You don't want your trades not to close in your take profit. You want the profits to get hit. So if, for example, I was in buys, say, I'd have my take profit perhaps looking at maybe this wick here. I might have my take profit, 5 pips below, maybe 5 pips below the zone, just so I know that it's going to get hit. So in regards to what you're saying about take profits, etc., I'd place your sort of stop loss, obviously the other side of a zone personally. That's obviously subjective. If it breaks a zone and you get stopped out, trust me, it's for the best. So stop loss, other side of the zones. If it breaks, it's okay. If it breaks a zone, the price is probably going to crumble anyway. So you don't want to get, make sure you're setting stop losses as well. Please don't be a fool. The only person you're playing is yourself. And if you move your stop losses, like, you're just cheating yourself, because you're essentially probably going to hemorrhage money, because keep moving your stops. Essentially, even when you move your stop once, you know then that you don't trust what your analysis is. You don't trust what you're saying. So how do you know where the market will go and where to take profit? Likelihood is, if it rejects one zone, it might come down to the next zone, which would then be resistance down to support, and then potentially vice versa. And so I'm saying zone to zone because the point is I want to take it from one to the next. Also, key is that if in middle of zone, consolidating, won't trade. And this is important because I want to know where the price is going to go. So if it's consolidating or it's in the middle of two price zones, and I don't want to trade because I don't know where the market's going to go. I don't have a bias, essentially. Do you wait for the market structure break on smaller time frame? So start high, move down to a smaller time frame, use a 15-minute or 5-minute like I demonstrated. When do you know the wick is going to fill? Go and check out Wicks Don't Lie's page on Instagram. Scroll down to the very bottom. Go through post by post while you're on the toilet or while you're having some kind of break, while you're having your lunch maybe. Just read the captions. Read his bio. When prices in momentum, the wicks are probably going to get filled. Because, like I say, wicks are essentially people pushing the price. Often wicks are also people trying to get out of positions. So where it's a massive wick, likely people have tried to push the price down as low as possible, get out of the positions, and then the buyers or the sellers have essentially pushed the price the other way. Next question. when it's from your experience, how many times is support and resistance tapped before breaking? Don't know. It's subjective. So again, that's very difficult to say. You know, sometimes it could hold 4 or 5 times. That sort of, in my eyes, it's like the more taps, I'd say, the more chance of breaking. So keep that in mind. How many trades do you take typically a day? 3 or 4 usually, sometimes 2, sometimes 1. Depends what I'm doing that day. Depends if I've got any student calls. Depends if I've got errands to run. Depends what happens in the trades. If I take one trade and I hold it from zone to zone, so it's not going to happen in 15 minutes. So I might only take one trade, but if it goes from one zone to the next, I'll hit 50, 60 pips, maybe sometimes more as well. So sometimes 1 trade, sometimes 3 trades. Really depends. Can you move down to onto the 4 hour? Yes, I can. Can you mid 4 hour? All right. Let me just get rid of some of the text just so, because otherwise it just messes it up. Okay. Well, we'll leave that breakout thing on there because I might do a bit of analysis for them. So what does a 4 hour look like? As you can see here, pretty much the same as a 1 hour. Move that text around. Get rid of the arrows as well because it looks stupid. So what does a 4 hour look like? As you can see, again, 1 hour zones, 4 hour zones are pretty much the same or similar. So 1 hour zones and 4 hour zones often will match up, especially with the rejection. Okay, let me move that over there. So like you can see here, 4 hour candle here, tap, 4 hour candle here, tap, 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 tap here, push up in the news candle because it was the news candle, tap here, tap there, rejection. We look to the 1 hour, look to the 15 minute. You can see why that obviously failed to break above that point and then went pretty much down to here. 4 hour again, rejection. Price rejects the support, pushing up. Now you can see pretty much in where we are as of now. So as a drawn, please show us how to scalp. Okay, well, when the price. So how would you scalp? Well, I don't know. You need to tell me what kind of trader you are. Obviously, zones are just one thing. You need to know. You need to have like a plan. You need a trading plan. So if you want to be a scalper, how do you want to scalp your pips? Do you want to take? Do you want to be selling from this zone and taking down to here? Do you want to buy here and just take all the way up to here? I don't know. You need to tell me more. So he's just asked that question about scalping and how to scalp based on zones. Zones isn't exactly scalping. It's more scalps that can turn to swings, essentially. When price taps a zone and you check the 15 minute and 5 for what kind of candles or patterns. Okay, so like I said, don't get too lost in candlestick patterns. They're just a confluence. So what am I looking for? Let me circle it. Let me just show you what I'm looking for. 15 minute time frame again. I'll have to zoom out. Okay. Oh shit. That's not what I wanted to do. What am I looking for in the 15 minute time frame to take sells, for example, when we've hit a zone? 2 candles here. What are those 2 candles? Can we please see that it's obviously a doji candle, so that means indecision. So price is essentially pushed up, couldn't sustain a close into the zone. Again, price is pushed up, couldn't sustain a close, and shock, we reject. This is interesting, actually. This is interesting. And now we're going through this chart. So you use 3 EMAs. Yes, I do. I use 14, 50, and 200. If you want to talk EMAs, go and speak to, well, actually don't go and speak to him. Please don't bother him, but just go and read his posts on Instagram. At EMAs don't work. Don't DM him. Just look at his posts. Like I said with Wicks Don't Lie, just scroll to the very bottom while you're on the toilet, and just literally click on the post, read the post, and you'll be surprised how much you'll actually take in from it. The same with pretty much anyone in the Forex family and the people that have got Instagram accounts that share education and info. We're making posts to show you what we're doing. But if you read the captions, it's really informative. Pretty much everyone does it, and I've tried to make sure my captions are better and are obviously constantly improving. Just because I'm trying to break things down for you as simple as I possibly can. So if you're interested in trading the same kind of way I do, then you can. If you want to talk EMAs, go and speak to Waqar at EMAs Don't Work. He's your man, pretty much. He's your man. Don't pester him and harass him because I've told you to, because I haven't. I've just said go and read his posts. Correlation between gold and UJ. Okay, so if gold essentially is a safe haven. So if the dollar goes to shit and people are scared that the dollar's not going to be worth anything. Sorry about this. I've got a bit of a cold as well, so I might sound a bit bunged up. So apologies about that. But if, for example, the dollar's going to shit and everyone's worried about the value of their money, they're going to go and put their money into assets, essentially, and commodities, because people think that they're going to hold the value and retain the value. So gold, for example, if the dollar's weak, gold's usually strong because people are pumping money into it. The same, if the dollar's strong, gold's usually weak because people are taking money out of it and they're not investing the money into commodities and assets. So yes, they do correlate. It's a 90-odd% correlation. I've read that somewhere. I don't know where. It's probably from Instagram or some kind of social media. But so yeah, if gold's moving up, you can take that as a confluence that UJ is probably going to be moving down, because essentially if you're buying gold, it's XAU USD, and if you're selling USD Japanese yen and you're selling dollar, buying yen, if you're buying gold, so you're buying XAU, selling US dollar. Next question. In which session does UJ move the most? What session does it move the most? What session does it move the most? Well, okay, well, it obviously moves the most in the New York session, so the North American session. I know you also get the crossover. So pairs move the most when there's a crossover in sessions. So, for example, when when London and New York cross in terms of like time frame. So you're looking at 1 o'clock, 12:30, 1 o'clock, 1:30, 2, 2:30, because then you've got the New York Stock Exchange open. So price is going to move pretty much. It's going to move in London, and it's going to move when London opens because there's a volume and people are trading. Banks are trading, people are trading. So price has got to move. It has to move at 8 o'clock, 8 a.m. London open. Has to move at 1 p.m. New York open. Has to move at 2:30 New York Stock Exchange open. So apologies that obviously all these times are in UK time because it's just what I know off the top of my head. Obviously, you can convert them back to Eastern or Pacific time if that's your time zone. But so yeah, that's when it moves the most. One moment. I'm just trying to reel through the questions, to be honest. Okay, right. So are we all happy with how I've marked up zones? Are we all understanding zones? Can we just give me a yay or a nay in the chat box if that's okay? Happy, amazing, yay. Okay, excellent. Okay, right. Let me scroll up a little bit so I can see the other questions. I tend to make things complicated with the time, so Fibonacci price patterns. Okay, Fib isn't something that I use, but I know people that do use it profitably. Personally, I'd say for you, just keep it simple. Just literally focus on price action. Maybe focus on zones, support, resistance. Throw EMAs if you understand them. If you don't, go and check out EMAs don't work. His Instagram page is like a fucking. It's not the holy grail, but it's another great confluence. If you can understand them, then you're in the money. Have you had any success scalping the opens? Yeah, that's what I do pretty much every day. Do you wait till it enters your zone before placing a trade or close by? So do I wait? So yeah, so if it taps the zone, I'm not going to enter it straight away, because if it taps it quickly, I'm going to think, okay, well, is it going to reject this time, or is the price actually going to break through, and we're going to break our resistance or break our support? So, don't be too hasty with things. Even if you don't take the perfect candle wick entry, just make sure you're looking at you're looking for exhaustion. Essentially, if you're selling resistance and buying support, you want to see exhaustion in wicks. Can you talk more about your open strategy? Yep. Okay. What I'll do is I'll talk about that next. What percentage of your account do you risk on a trade? 1%. 1% per position. So if I've opened 3 positions, it's 1% each. My risk is always 1 to 2. So if I'm risking 1%, I want to gain 2%, and so on. So to sum it up, when price hits zone at 1 hour, we switch to 15-minute or 5-minute and wait for exhaustion, like 2 hits together, then take a trade regardless of market structure. No, not regardless of market structure, but look at market structure. If market structure is buys and it's bullish and you're at support, then yeah, likelihood is you're following market structure, aren't you? Because you're taking buys in an uptrending market, so you're following trend because you're taking buys. But yeah, close. Not 100%, but yeah. So what would your confirmation be to know it's leaving the zone? If there's usually it gets broke by the news. Sometimes it's broke just because obviously you've got to take into consideration, market structure. So how's the market moving? How's the price moving? What time is it as well? Is it, are we about to overlap from London to New York? Is it going to be orders? You got to take loads into consideration. So zones are just another thing to think about if you want to. You don't have to take it gospel, but to sum it up, yeah, look at your 1 hour zone, switch to 15-minute, 5-minute, wait for exhaustion, take into consideration market structure, and the likelihood is zone to zone. So that's summing zones up. What time frame do you enter on? 1 minute or 5 minute? 5 minute. I don't mess with the 1 minute. Sorry to say. Does price have to be deep in the zone on 5-minute chart before you count it? It's also a solid. No, not really, because if you look here where my cursor is now, it's not exactly deep into a zone really. Looking left, it's literally tapped into it. That's why you extend it above a little bit, because you need a bit of wiggle room, in my opinion. Other people might disagree, but personally, I'd say you've got to allow for some kind of spillage or slippage, whatever you call it. Again, exhaustion is pretty much subjective as well. So many things in trading is just opinions. How do you know we're in strong momentum? Okay, well, look at your higher time frame. If you want to look at momentum, look at 1 hour and say, okay, well, price is moving quickly. Look at 15-minute, price is moving quickly. 5-minute, okay, where are we? So how do you know we're in momentum? You should know. You should just be able to look at a chart blank and say, okay, looking at this, I can see price is moving nicely. Buyers are firmly in control, and it's going to be a buy up to this point or a sell down to this point, vice versa. Can I talk? Okay, so let me just talk about opens for a second. So I'm closing the chat box. Sorry. If you've got more questions, they're going to get answered, because I'm going to run a little bit over because we had the writing on the screen. Obviously, that's not fair on you. It's not fair on me. So how do I trade opens? One, look at previous session. So for example, if I'm trading London Open, I look at Asian. If I was trading New York, I would look at London. Point number one, essentially, you just want to understand market structure. You want to understand what's actually happening. Is it going to be continuation? Is price moving quickly? Is it in momentum? So if price is in momentum in London, is it going to continue in New York? Is a reasonable suggestion that price is going to keep moving the same way and there's not going to be any kind of roadblocks. So tip number one, trading opens, look at the previous session. Tip two, where are we? Are we at 1 4 hour supple res drop time frame to see upon the open? So for example, if it's 7:45 and we've hit a 1 hour support in an uptrend, likelihood is it's going to be buys bullish for the open, because if you close above the support, likelihood is it's buys. Close below resistance, probably going to be sells. Selling resistance, buying support, shock horror, that kind of topic comes up again. So three, what is price doing? Is it consolidating as well? So for example, if we're in this little box here and price isn't really moving much, I'm going to think, okay, is the open what I want to trade? If like in my plan, I want 15 pips as a minimum kind of take profit, then am I really going to be trading the open if, I can only go from this point to this point, for example? Obviously, that's a bad example, but is there enough room? So number 4, is there enough room? Oh, shit. 4, is there enough room? Enough room to take the trade for the open. Number 5 is the news on your pair. So if you're trading pound yen, if there's news, it's at 9:30, hour and a half after the open, and it doesn't take a rocket scientist to work out that before news comes out, the price usually consolidates, because we know news is going to move the price. So that's a 101 of how I would look at even before I've looked at the chart. How I want to basically work out what's going to happen. Also, check the currency strength meter, live charts. Google that. Thank me later. Because, for example, if you've got USD JPY 3 bars, and you've got, you could say if you got a USD 1 bar, Japanese yen is 4 bars. That tells you the US dollar is weak and the Japanese yen is strong. What do we know is likely to happen if the market structure tells us that we should move down, and the currency strength meter tells us we've got a weak ass dollar and a strong ass yen? Then the chances are we're going to move down in price, and it's a confluence. So this is a confluence to say what could happen. Live charts. I always look at that every day, every morning, just the same as I look at pre-markets before they come out. They come out a couple of hours before New York opens. If the stocks are bad, then US dollar is usually bad. So it's good for gold, bad for dollar. Good stocks, good dollar, bad gold. Same kind of principle. Website for currency strength meter, livecharts.co.uk. So livecharts.co.uk. Go on there, and you'll see exactly what I'm talking about. So this little diagram I've made here, the little bars, you'll understand why I've made that. Okay, questions. I'm depressed after losing a lot of money. No, I am scared to take trades. Okay, right. Let me. I'm going to come back to that as a lot like the wrap up almost. But I'm gonna talk about that. How do you write up a trading plan? I'll send you a copy of mine. Essentially, it just tells you a trade. How do you write a trading plan? Okay. Let me get rid of that. Get rid of that. Trading plan 101. What kind of trader? These are the questions you need to be writing down really and asking yourself, and maybe write it instead of typing it, just because it'd be easier for you. So, what kind of trader am I? Scalp, swing. What pair? USD CAD maybe, and GBP, JPY. What's your goal? Your short-term goal? Make enough money to take my missus for dinner. Dinner once a month. I don't know. Blah blah blah. What kind of trades do you look at? So, what is my trading? Trading edge. Is it zones? Is it EMAs? Is it wicks? Is it I don't know. Support res? Is it fib? Is it swings? I don't know. I mean, there could be loads. Your edge is your edge, and like it's personal to a lot of people, isn't it? So, what else would be your plan? This is a good one. Rules to not trade. So if you argue with your partner or kids, I don't know how old people are. Often you'll see your emotions are getting in the way of your trade. So emotions have no room in FX. I've got loads of things in the box. In Forex. So let's just keep that in mind. So if there's no room for them, then you've got to pretty much be like a robot. Don't lose all your social skills and shit, but you need to just turn off essentially and just say, okay, well, these are the trades I'm going to make. This is why I'm going to make it. These are the rules. You need to like basically have like a process and say, okay, if I see this, I'll trade. If I don't see this, I won't trade, etc., etc. And you can't be greedy or scared to take trades. I'm going to talk about that in a little bit because that was a good question. Other rules not to trade. News, if you don't understand it. News isn't for everyone. Personally, I think news is built into the markets, and I've got a lot of documents that prove when I've traded news why it's structured in, price is structured in. But so yeah, I might do a webinar on news and shit like that at some point. Other rules not to trade. I won't trade if I haven't slept well. I won't trade if. Also, this is the best one. This is a key rule in my plan because I've got it in front of me. So that's what I'm literally rattling it off to you. Don't trade because everyone else is. And this is the fear of missing out almost. This is like, okay, well, my friend made 15 pips, my friend made 50 pips, he made 5. Don't worry about what they're doing, just worry about what you're doing. So all you need to think about is if it's in my trading plan, then it's in my plan. If it's not in my plan, then it's not in my plan. I don't need to trade. Okay, right. Let me just go through some questions now. Sorry. Okay, so that's how you write up a trading plan. Why do you look at the Asian session before London Open? Because you want to see if the price is going to continue to move in the same way, in the same trend, in the same direction. So, for example, if Asian session is very bullish, is London going to be a continuation? So yeah, that's why I do that. At the Open, are you taking positions on 15-minute support resistance or support and resistance? Yeah, I'm taking them on like 1 hour and like 1 hour and 15 minute. Not based on the not based on the last 3 candles. No. If currency indicator says USD is weak and JPY is strong, then UJ will go down. It's a confluence, yeah. It's not gospel, but yeah, I look at it quite readily. Can you send me a copy of your plan? Yep. Yes, I can. Go on my Instagram. My email's on my Instagram. It's info@ah-fx.co.uk. Drop me an email, and I'll send you a copy of it. Just say, hello, I'm from the webinar. I asked for your plan. Can I have a copy? And I'll give it to you. One of my medium-term goals is to leave work, have freedom. But what is it like to actually work for yourself? Do you miss working with people? Okay, again, a great question. Some great questions coming out. I'm really happy with the questions. I miss interacting with people. A couple of weeks ago, I went for a coffee with a woman I used to work with, who's just had a baby, and I used to sit in an office with her every day for like 2 years, and it's pretty much the same jokes and same kind of humor when we met up as we did 2 years ago. Like it's. You don't lose social skills like that, and people are still the same. I'm still the same person, but that's why I mentor. That's why I do mentorship, because I like interacting with people. So my group is essentially my work colleagues. That I'm not the boss because I'm the mentor. I'm the same level as you. There's no hierarchy. So do I miss working with other people? Yes, but I work with my students every day and some other unreal traders are in my group as well, so I don't miss this, essentially working with people. Face-to-face contact I miss a little bit, yeah, but so answer to that is yeah. What's it like to work for yourself? Stressful. Anyone that tells you different's a liar. Working for yourself is stressful. I don't think it's that stressful because I've got a good brain, I've got a good business brain, and I've got money behind me. If my business, goes to shit, so if Forex goes to shit, then like I said, I can live really comfortably for a while if I had to go and get another job. So if the currency market's just ended tomorrow, then I'd be all right for a while. So that's why I don't think it's that stressful. But other people do think it's stressful, especially if you've got big commitments, and it would be stressful. So I personally don't. But yeah, so what's it like to work for yourself? Maybe I might do a YouTube video on it, on like the stresses of it's like entrepreneurship. It's like entrepreneurship essentially, isn't it? And a good person to watch a video wise on that is a guy called Stephen Bartlett. If you Facebook him or YouTube him, he's got some unbelievable videos. He'd be an amazing trader. His mindset's unreal. So go and check him out, man. He owns I think he owns an agency called Social Chain. From what I've realized, from what I've watched. Sorry, and the guys are like a real, really humble as well. I'd assume he's got a few quid as well now. He's like the company's taken off massively, but he's just like it's almost like he's the same guy. Like I've got him on Facebook, and we've chatted a little bit here and there, and he's just a really, really sound guy. But so. Maybe if you're interested in like mindset kind of stuff, even away from Forex, it doesn't have to be Forex related to be mindset related. How far left would you look maximum to the freshest zone? A couple of depends on the high time frame. So, for example, that's a good question. That is. So on so if you're trading 1 hour zones and it breaks a zone, I'd jump onto a high time frame like daily or something, or I'd never go higher than daily personally. But if you had to find, you're looking for the same thing on daily, so you'd literally, I'll show you. Okay, let me delete that. So for example, okay, that's a bit messy. move the arrows on that. Okay. So, for example, if we broke this point here, this zone here, I'd be looking to my left-hand side and I'd be saying, okay, well, where could we go on that? So on our way down here, where could we go? So I'd say, okay, well, these wicks are interesting. Maybe draw a zone there. This is like the penultimate thing not penultimate, sorry. I don't know what I'm saying that. But this is like another point I'd look at, another point of reference. So when I'm talking about looking left, I jump high time frame. So maybe this is why you extend your shit out as well. Look, so if you extend that out, got another zone there. You extend this out, got another zone there. That's what, and I keep them drawn on for a reason. Like the point is, if you keep it drawn on, you're never gonna get caught short in terms of like missing out where price might reject. So that's what I do in terms of looking left and my zones. Okay, next. What are some books or videos that have helped you the most? Trading the Zone, Naked Forex. Those are the two best ones, I'd say. Don't Need No Stinking Indicators. Good book as well. Do you wait on the 5-minute chart for candles getting out of the zone before entering your trade after exhaustion? Yeah, I look at the 5 minutes to see wicks. How is going from working to having financial freedom with Forex? It's the same. I'm still the same person. Literally the same, like the very same person. Like I said, my monetary goals are still exactly the same. Like I have no intention of buying a stupid watch, or it's not stupid, but like it depends on your outlook of money. It depends on your outlook of life as well. I'd say life gains over financial gains every time. So I've done some pretty cool shit this year. Because I had the opportunity to do so, and I maybe neglected Forex a little bit. But yeah, you can't make memories without the money as well, I suppose. So it's one of them. But so how is it going from working to financial freedom? Even when I was at work, I had financial freedom, so it's not like it was a massive transition because I sort of had a bit of money anyway. Even though I was like running a business even though I was at work. It's a weird setup. But yeah, so it's cool. Stephen Bartlett's a G. Agree. The guy's a G. When was your last drawdown? Friday? As in like 2 pips a drawdown, I think. I was trading dollar CAD and I was in like 2 pips or something. So Friday. I'm in drawdown sometimes. Not a lot though. It's never a lot. Last question about opens. If price has just recently broken resistance, so now is a brand new price area. It's not been at all lately. Nothing to the left. In your experience, does the open push price up? If you've broken resistance, it's not there has to be something to the left, but go on a higher time frame and have a look. Like I've just done, I've showed you on the daily. I've basically made 2 zones, haven't I? And if you go like that and zoom out a tiny bit, you can see the 2 little zones that I've made. I've said, okay, well, if it breaks this resistance, probably going to go up to this one. If it breaks this one, probably going to go up to this one. So look left, basically. Just look left, and you'd be really surprised. You'd be surprised at how respectful price is of these little levels. But yeah, so always look to your left, and if there's nothing, then just be wary, perhaps. So if it's like a new high of the currency, then just be wary, like, or new low. Sorry, it's not always a bullish trend. It's obviously two-way street. Do you wait for the candle to close outside the zone again to enter? Okay, so if it breaks a zone, sometimes I'll try and enter on the retest. So if it breaks out of it, usually price come back a little bit, or it like comes back, retest the zone like a last kiss, and then I'll probably take an entry on that. Or sometimes it falls back into the zone and you're just like, what are you going to do? So again, I don't know. Until I see the setup in front of me, I can't say. 1 hour, 4 hour support, lower time frames in waves, basically. Yeah, market moves in waves. It can't just move up and it can't just move down. So you can see here, price essentially just, it doesn't go straight down in one candle, does it? It takes time. So, price pushes down, push it back up a little bit, push down, push it back up a little bit, push it down. So you can't expect it to happen straight away. So be patient. If it breaks a consolidation box, do you expect a last kiss? Yeah, so I expect a retest usually. Doesn't always, but usually. 14th of the 9th, 2300 UJ. Okay, let me go to it. So the 14th. Okay, this candle. No, this candle. This is in the question box. Would you draw the support zone, or would you include the? It's almost like I'd include. Again, it's subjective. So if you look at the wick and look to the left of where the wick's going, you could argue that you've got a wick here. Oh no, right, that hasn't matched up. Sorry, my bad. I don't know. You could argue that you've got that wick there, but the price has pretty much zapped through it and come all the way back in one candle. So good question, but I'd say again it's pretty subjective. Good question, that is. Intelligent question though, so like really good question. But so what would you say? I'd say, okay, use wicks as your guideline and keep an eye out for it, because it's there for a reason. It's like it's there to be respected, essentially. And I keep saying to you, just make sure you keep things drawn on. So my charts are blank today because I made them blank, but I'm going to keep all this on for tomorrow because it's going to help me this week. But good question. What things you look when you're checking the lower time frame in this case? So what do I look for? Exhaustion. So exhaustion is wicks of candles above or below. Depends on the trend. Appreciate you doing this webinar. Yep, no problem. My pleasure. Also, I think I need to upgrade my account as well, because I don't think half the people that wanted to get on got on, because I think I've only got 100 participants, which is bad vibes, but sorry. That's a morning start. Bullish. Okay, yeah, maybe. I'm not massive in the candlestick patterns. I don't know them off the top of my head. How many pairs do you track? Dollar yen, dollar CAD, really, gold just for confluence. But so yeah, dollar yen's my main. Dollar CAD for the lols, really, because it's easy pair to trade, I think. And you can, like I keep saying, if you can trade one pair good in a consecutive and consistent manner using the same kind of techniques, you can just transfer it to another pair. Sometimes you can trade US dollar against ZAR, Zarina. I know people that trade that. Moves too quick for me, way too quick, so I wouldn't even think about it. But I know people that trade that with ease. Is it okay to check the DXY to see the strength of the dollar? Yeah. Again, it's all confluence. Great. A good question. Yeah, I could check that. Could check live charts, could check dollar index. Good question. But again, it's like building up about different confluences. So you're building up different kind of ideas. So the more confluence you've got, the more confident you're going to be in a trade setup. Personally, I think. Right. I'm going to talk a little bit about fear and greed. Okay. We're going to talk about fear and greed first before I jump into more questions. And the reason we're going to talk about this is because somebody in the question box said, I've lost money doing this and now I'm scared to take trades. So you've got the fear, essentially. So you fear. So you've lost money and don't want to lose more. Okay. Okay, fair enough. So you've lost money. Why have you lost money? So why can you lose money? Bad analysis. Bad risk management. bad risk management. So, for example, if your account's 500 quid and you trade in 5 lots, then it's that kind of shit. No stop losses, etc. Bad risk management. So you scared. So now you're scared to take more trades. So scared to take more trades. Okay, think about it like this. 1, you shouldn't be trading with money that you don't have. So you shouldn't be borrowing money to trade for 1. 2, you shouldn't be trading with money you don't want to lose either. So if your account gets wiped out, you should still be paying your bills and still be paying for your life. You shouldn't be risking your mortgage to be trading. If you're doing that, please stop. Please seek advice as well. So you have a fear essentially. So you're scared because, so for example, you've lost 2 or 3 trades in a row. You're scared. Your analysis isn't very good, and you're changing the system. You're thinking, okay, well, what can I do now that's going to make me my money back? How am I going to do that? If you've got something that works, so for example, zones for me, I know that they're so profitable and so consistent, and the setups happen so often. Even if I lose 2 or 3 times in a row, maybe I've taken a bad entry. Maybe my entry's not been right. Don't just change the system because you've lost 2 or 3 times or 4 or 5 times. The point of risk management is, if you're risking 1%, are you going to lose 100 trades in a row? If you do, you shouldn't be trading. You need to go back to the drawing board first. If you're taking risk management seriously and into account, so you're risking 1%, are you going to lose 100 times in a row? No, probably not. So you shouldn't be scared to take more trades. You shouldn't be scared because, don't be scared. Scared because A, don't trade with money you can't lose. B, were prepared to risk to make, speculate to accumulate. That's essentially what trading is. It's an investment, so you're essentially putting money on the line to make more money. And the difference between trading and betting on football, etc., is the odds are 50-50 before you've even started. So it's a buy or a sell. It can't be anything else. So Forex should be seen as an investment, not seen as a gamble. Okay, your voice is breaking a bit. Yeah, sorry about that. I got a really, really dry throat. I'm just going to take a drink now. Okay, it's that magic hour mark. 1 moment. Okay, can you let me know about the audio now? It should be a little bit better. It always happens for like an hour or so. My mic is absolutely amazing, and then it starts to crackle, and I've just had a drink as well, so it might have just been my throat that was dry as fuck as well. Okay, what is this? Okie dokie. What was I talking about? Okay, I was talking about speculate to accumulate. I was talking about Forex being an investment, talking about it not being a gamble. You're not betting on soccer, football, and all that shit. It's not like roulette. You've got a 50-50 chance before you even start. So if you're scared to take more trades, start trading smaller lots. If you're scared to be taking the trades, you're trading too much. The monetary value is too high for you. In my eyes, I don't have any anymore because I know if I lose my trading money, I'm still going to be fine. So I've got my money that I'm prepared to lose. The chances of me losing it are so slim because I never really lose, 10, 15 trades in a row to wipe myself out. I only risk 1% anyway per position, so I'd have to lose 100 positions in a row to wipe out. And because my risk is 1 to 2, and so when we're talking risk, risk is 1 to 2 at least. So 5 pips to be lost, 10 pip to be gained. So, for example, talking risk management, if you lose three positions of 5 pips, but then your next trade you win 3 positions of 10 pips, you're still in a surplus and a positive of 15 pips because you're using 1 to 2 risk management. For every pip you risk, 2 pips should be gained. So if you're 50% profitable and you 1 to 2 risk, then you're going to make money anyway. So you're very consistent. So why don't you risk high? Not saying risk high all the time, but consistent. Why not? Because I'm into longevity. Longevity is, it's not longevity, it's my middle name because that's a lyric from Stardom, I think. Sick rapper as well. Check him out. But so I'm in it for the long haul. I want to trade for the rest of my life. I'm 22 and I want to trade for the rest of my life. So what's the point of not being conservative? I've been conservative so far and it's made me a shitload of money. So why would I do anything different? Yes, I'm consistent, but I'm consistent because I just do the same thing, take the same risks because it's manageable risk. So I'm happy with the risk at all times. I know it's 1 to 2, so I don't need to change. I don't need to change, is what I'm saying. Okay. I think that's covered everything. I think I've covered all the questions in the box. Oh, no, hang on a minute. 1 minute, 1 minute. There's another one. Okay, while I cover this question, if you've got more questions, please put them in the box now, and then I'll do a bit of a question and answer, and then we'll sign out and sort of stop the meeting. Kevin talks about London Open is rarely a London close is rarely a fake out. Is that pushing your opinion? The last 15 minutes before close or the first 15 minutes after the close? Okay, so when the markets are closing, it's like it might be like continuation and like a push essentially, but what I'm trying to say to you is that where's my phone gone? What I'm trying to say to you is 1 minute. Okay. What I'm trying to say is I just took a screenshot so that works. Okay. Okay, so it's hard to explain what with the closes. If you look at when New York used to close at 9 o'clock, and UJ was like a buy for 3 weeks or something in a row, and it went up every single time. Think about candle timing. So what Kevin's talking about is probably about candle timing. So a 1 hour candle is made up of 4 15-minute candles. It's made up of 12 5-minute candles. In the last 10, 15 minutes of the 1 hour, 10, 15 minutes of the 4 hour, you're going to see a push usually, and it's usually a continuation. So think about candle timing is what I'd say for that question there. Okay. Do you use 200 EMA as Confluence? Yes, I use it as essentially I use it as take profit as well a lot. I'd love to be able to trade full time in future and being my own boss. I've got the bet. Okay, so what I'd say to you is a best suggestion. Everyone wants to trade full time. I don't trade full time. I make good money trading, but I also do other stuff for money. So, I do a bit of design work for money, do mentorship. I get paid for mentorship. I help out a family, so I get paid from loads of different sources. It's not just one thing. So keep that in mind that everyone wants to trade full time. But if you want to trade full time and you've got kids to feed or, you've got a mortgage to pay, why don't you get a part-time job? Get the money from the part-time job to cover your bills and then trade for your surplus income. How do you know the candle will break the zone? I don't. I just look at momentum. How would you take an entry with minimal drawdown? Go into a smaller time frame. Go into so for example, you can use EMAs to minimize drawdown. And if you want to work out how to do that, go on EMAs Don't Work's page, read his posts. You'll look at his entries, and usually he's never in a drawdown. Thank you for the webinar. It's opened my eyes. See the market clear now. Yep, no problem. My pleasure. Sorry about this. Sorry about like the initial like messing around. Like, you know, I didn't realize people could draw on my screen. I thought I'd disabled that, but I hadn't, and it took me ages to figure out how to get rid of it. But it's a learning curve, so it's one of them. So I haven't done that many webinars. With a £200 account, I'm aiming for 5 to 10 pips per trade with 5 pips stop loss. Okay, first off, I'd say that's like 1-to-1. So I'd say maybe go for 5 risk, 10 gains, or 1-to-2. What would you advise on a stop loss for a newer trader? Why don't you have a 10 pip stop loss for a 20 pip take profit, you know, and try trade zones. So for example, if you're a newer trader, your entries probably won't be on point. So you may struggle and you might get stopped out quite a lot of times at the beginning. That's just about time in the charts, time in the trenches, really. So, you know, your stop loss, it can be whatever you want. If you want a 20 pip stop loss, it can be, but just use 40 pip take profit. You need good risk management. What would you advise on lot size and amount of positions? Small ass lot sizes. So if your account's £200 and you want to risk 1%, then it's £2 is your 1%, isn't it? So whatever lot size you can get to work out your stop loss to equal £2. That's if you're taking one entry. So if you want to do 1% per entry, then it's £2 per entry. Then your stop loss is X amount of pips. I don't know if I don't know. It's lot size is difficult because of your account, and I want to know about your risk. If you tell me about your risk, I can try and answer it. Because obviously it moves like in micros as well. It depends what broker you're with as well, like because of spread, etc. Spread and commission, like so. When you're talking about your risk, sometimes it depends what broker you're with. If you want to risk, you know, if you want your risk to be 1 to 2, but then you've got to cover your commissions. Maybe you need to make a few more pips than, you know, what you think. Sorry about that. I've got such a bad throat. Do you suggest waiting for candle to close for confirmation? Yeah, I suppose so. I mean, it's subjective. Sometimes I take entries and sit and think, oh, I could have done better. But sometimes I think that's fucking sick. You know, because like I say, like, depends what candle you're talking about. If you're talking about the 1 hour, like I've said, last 10, 15 minutes usually push anyway. So you could probably get a killer entry. So it's like, think about candle timing for your entries. Aiming for a 5% gain a day, risk about 3% loss a day. Okay, well, so that's what, 1 to 1.5, something like that. Yeah, okay, well, if you want a 5% gain and your risk is, yeah, okay, well, it depends on your lots. So 5% gain of £200 is £10 a day. So how many pips do you want to get that's worth £10? How big is your lot going to be? And because of the broker you're with, so if you're with IC Markets, it's commission based. So you need to, I think it's 5 times your lot. So if your lot's 10, then you need, so it's for the first 50, or if your lot's 1, then it's the first 5 that you don't get a profit from. So yeah, it's hard for me to say. Okay, guys, it's 5:30 now, and appreciate, obviously, you guys have got lives to live. I've got life to live as well. Hopefully you enjoyed the webinar. Hopefully it was enjoyable. Hopefully it was informative. Hopefully I've answered all your questions as well. Let me just go and get... Okay, right. So what I'm going to do is just, if the webinar was helpful for you, literally please just stick in the box, the comment box now, what, you know, maybe what you've learned, what's been helpful, etc. Just stick some feedback in the box now, would be much appreciated. So thank you all for attending. It was it's been emotional, had a bit of a rough ride to start with, but thank you very much. I appreciate your time and appreciate the support and commitment of you all to take your time on a Sunday. Oh, hang on a minute. Can you give us more information about your mentorship? Message me on Instagram. Or go to my website, which is www.ah-fx.co.uk, and all info's there, all prices, packages, blah, blah, blah. I missed the start. Room was full. Will it be in the Ted's Vault? Yes, it will be in Ted's Vault, be in any Forex family member vault, because obviously I want to help them out. They help me out. It's obviously going to be in my student vault, and I'm also going to put it on YouTube. So go and subscribe to my YouTube now. Let me put the link in for the YouTube. Okay. Please bear with me. Obviously, I've paused the screen. That's a channel. Okay, people. I'm going to put the YouTube link in the box now. That's going to be where all the videos are hosted. And this webinar is going to be uploaded on there at some stage. So go subscribe if you don't already. And I appreciate everyone's time for joining. Thank you very much. And you've been an amazing audience. So peace out from me. Have a great Sunday.